What's going on, YouTube? Now, this video is gonna be a little different, right? I pretty much just got done with a trade. The trade did go in profit. So I did make a 1 to 2 risk reward on the trade, and so I just wanted to just get on camera and make this video because I'm beginning to enter like another level of consistency in terms of understanding my system and sticking to it almost in all conditions, right? And I mean, like, as a trader, we all go on that journey of self-discipline and really paying attention to your notes and your journaling over time and actually beginning to follow it. And once you follow it, as long as you're learning the right things and you're actually advancing and evolving, then the things that you write down will actually help you along the way. And so now pretty much I am about 2 months profitable, like 2 full months profitable in my trading journey. And when it comes to this, this is obviously like a new level and a new area of consistency in terms of going forward, you know. But as y'all can see by the background, I did make some adjustments. I don't know how I like this one. Let me know what y'all think about the trading setup, currently. And yeah, I mean, this is just real quick behind the scenes, so to speak, with this video. And now I'm gonna just get straight to the trade recap and y'all will see that perspective from here on out. All right, so now that we are switched back to the charts perspective, so where y'all can see my charts, you can just see already so far, if I would have stayed in this trade, I exited at a 2.4. If I would have stayed in this trade, oh snap, I would have potentially made a 1 to 4.7 or 1 to 4.5. Now, the reason this didn't happen in this case is because I didn't plan for it. Like, I was okay exiting my trade when it hit my target, and that was the target that I was aiming for. Now, but there are some days where, I might just say, okay, like now I want to target a lower price, because as you can see, price ultimately still can continue down until it gets to this in my eyes, I say liquidity area here, because it is also a form of support if you want to go by market structure. And obviously and by support, I mean here, right here. Right? Let me label this real quick. Here to here, right? You have it being resistance, and now it could become a level of support that price can test back up before going back in this upwards movement, or it'll just be some level of, like I was saying, support. But ultimately for me, as a max target that I did have in mind, though, I just wasn't trying to plan on it for this particular trade. But let me, where did my trade go? Okay. If I was to have this planned out, my maximum TP would look something like this. So like what I'm starting to think of in the future, it would be it'll be very smart to diversify, and alongside having, a account where I day trade every day, just more like, even right now, I'm very diversified with my approach to how I trade across my accounts that I'm trading. Like, once you start trading multiple accounts, it's like I don't have a trade copier, so it's like I execute each account on certain days, or I might go about a certain account slightly differently with risks depending on how the market looks, or like how confident I am in the trade actually playing out, right? But so I see that it will be important to sort of have a swing, because in the future, right? Let's say I'm having a swing only account where I'm only taking trades where I want to hold for a couple days to like a week or so, or even more on a whole nother type of account. And that's more so like learn long-term investments type of thing for that one. But even for scenarios like this, I would be completely fine swing trading this with the potential to make a 1 to 10 risk to reward if I was had a strict swing trade only account. And so, that's definitely something that I'm going to look into in the future. But back to this particular trade, right? I got out somewhere around here. So first thing first, I took a look at the daily time frame just to gauge the current momentum and structure. And so just off of that, I seen like it's a lot of squabble that you can see here, but sort of ignore that right now. But so I seen that, okay, price is approaching a potential key level, as in once you look to the left, we see this area of liquidity, this area of potential resistance, to where we can expect that from this point prices may begin to go lower. And so that was just my initial thought process once it came to the daily time frame. And who knows, we might even have a daily CRT forming that will ultimately target these lows here from the previous day, depending on how today ends as well. And so that also could be a next trade setup that I can take and see how I'm sort of seeing things ahead. That's sort of how you naturally want to see things as a trader, because that way, like once you make a profit on something, you already had a plan for it, and therefore you already prepare for the market to make that type of movement. Now from there, I go to the daily time frame, and I also take a look and I see first, like I like to just sit and observe. So me, when I open the 4 hour time frame, I just look at the chart and I just look, right? And so first thing first, what I did is I saw like, okay, our majority of momentum that we have is sales, because we have overall all this bears movement, and we see that, our overall bearish momentum to begin to enter the market again if price comes here. And so I marked this area off as my key level. And then I also just took a note of the highest point that price can go to before we start seeing rejection. And I put this high here. And I just, drew it along. And so with that, I understand, okay, the market is currently in a distribution phase, because we have, whenever we look to the left and we see that the majority of momentum is bearish, that is distribution. And so phase one, okay, we got all this distribution. And so the way that I do it is, once I mark my key level, I'm waiting for price to reach this key level no matter what. So as long as, like, even though we have this bullish momentum coming into the market, right? Even if I do take a trade, I might only take that trade until it comes to the key level. It's always about the key level being that automatic point of retracement, because that's like a liquidity area, sort of, that it gets the most reaction out of the market. These areas, because they are key levels, they are literally areas that gets, I like to say, this is areas that the institutions look to get in on their positions. Therefore, these areas have a lot of volume going in a certain direction that starts the reversal. There you go. And so with that, right, once I understood that that's my long-term perspective, and I have lower lows, lower high, and you're ultimately expecting target to target lows. It's like, okay, now since price is in my key level area, let me look for the prime level of entry. But first, still, you still got to get the 4 hour direction. And so at this point, now I'm about to go into replay mode so you can sort of see how the candles looked at the time. My stuff just ran out. That's crazy. All right. I'm gonna have to rebuy that. But just as you can still see from a 30-minute perspective, right? We had a CRT on the 30-minute time frame when it comes to this candle here at 9 o'clock. So this was pretty much once New York began to open, we see that we had that sweep of the high. Let me zoom in a bit. So we understand that we're on a 30-minute time frame. And okay, we understood that a sweep of a high means that price will then target lows. And so now, as I'm trying to think in my mind, I'm thinking execution. Where can be, what is the prime point of entry from this point of time? And so you can see that on a lower time frame, you can follow the very same cycle that I have here, which is distribution, which was that long-term sales. We have this level of distribution. And now phase two, price is going to manipulate into what you can say this is a lower time frame key level that price is going to manipulate into. And so you will wait no matter what. Once price touches that lower time frame key level, and you see that there's rejection into the market, you enter. And that's exactly what I did here. I entered, and I see that, you can see that price pretty much went to ultimately my take profit. One thing that I'm also testing, that I'm going to start to test, is like, because once I'm starting to learn that, like, on my trades, I'm barely experiencing a lot of drawdown. And so with that, it's starting to make me wonder, should I leave this much space? And should I start to actually just place it somewhere like here and call it a day? And instead of a 1 to 2, this would have been a quick 1 to 4, a very quick one. And so there's a lot of trades that I have where I could have made more risk to reward if I had just made a tighter stop, because the price didn't go back up to that level anyway. So it's just something that I'm going to take note of. And right now I'm not going to make a change, but I'm just going to take note and really see that, okay, at some point I can make a higher risk reward if I just lower my risk by a tad bit, if I stay focused on my same level of overall accuracy and timing in the market. And so, see, that's also a thing that's important with understanding timing and the great thing about CRT overall. And so this is what's pretty much, in my eyes, separates something like ICT between CRT, because CRT is focused on a more dynamic approach to what's right in front of you and the timing in real time. Once you understand that, like, price is rejecting, or whether it's, at a higher time frame key level and the lower time frame key level, and everything is correlating, you can have some very good entries that you could take. And even like I was saying, if I would have held this with that same low entry point, look at this. All right, this is a 1 to 7 so far, and even from here, a 1 to 9 that I could have had today, because this was still my entry point, no matter however you want to call it. And price never came back to my entry point. So once you understand the perfect timing of the market, you can see that price really will almost not go back to that entry point for the entire day. So you can hold certain trades longer and even have a lower risk as well with confidence, because you're always aligned with the market. You're on the right side of the market. And that's the side that you want to be on. Right? You don't want to be on the side that you think the market is on. You want to be on the right side of the market. And in order to align yourself with the right side of the market, you have to align yourself with the liquidity and where it's targeting. And that's what CRT straight up is in a very simplified way. And so really, I mean, the trade pretty much speaks for itself overall. Even though my exit point was here, I still, the way that I maintained the trade is I took the trade. So on my personal account, I got in pretty early. So my personal account, I was already in after here, right? And so I went through this retracement and I got in again on my personal account and I held it. But across my accounts that I do have, that's like I'm taking challenges on and that are on the journey to becoming funded, I still went in profit on these accounts. I took it here and I wrote it down to this level and took profit. So yeah, you can see my thought process here when I on a lower time frame was phase one, distribution, manipulation into the lower time frame key level, and then ultimately understanding that once we become under a certain point, we will then enter our decline where price will pretty much just begin to sort of tank down, because that's now where the market is going overall as well on lower time frames and higher time frames. And so you're just in flow with the market. And so I just held my trade through these minor retracements. It hit my CRT low on the 30-minute as well. I didn't hold it all the way through to the 4-hour CRT low. I could have, but I was just okay with my profits overall. Like, this would have also made the trade, even just this, a 1 to 5 if I had that. But my stop loss I had set was here. I had a 12 pip stop. And see, so I see that with my trade setup, with my accuracy, I might not need this much, and I can also lower it and sort of take double of profit on the same trade setups. Like, I didn't hold it all the way here, but even still, like I actually exited here, but I could have still made so much more. So that's something that I'm going to also like take note when it comes to trading and look to improve on, as becoming a better trader each and every day that I enter the markets. And I'm not just entering the markets just to gamble. I'm actually entering it as a profession and trying to make the profits correctly through a strategy and a framework that works, right? But yeah, that's going to be pretty much this video for this trade recap for today. Make sure to hit that subscribe button and see y'all in the next video. Peace.